Hi, welcome. Today we're going to talk about the double bottom at rising daily 200 MA trading strategy. Now this trading strategy will employ two things. First is the chart pattern of double bottom, and then second thing is the rising 200 MA. And when you combine these two things together, you can actually get a very high reward to risk trading strategy. And because you employ the rising 200 MA, sometimes the stock can go very high up. So the reward to risk is definitely in your favor. Sometimes you can get 3, 4, 5, or even 6 reward to risk ratio if you pick the trading setup properly. So without further ado, let's take a look at the screen here. Now, for those of you who have been trading for a while, you will know what the double bottom is. The double bottom looks exactly like this. W, okay, a W. The stock declines, goes up, make the middle, and then declines to about the same lows, and then goes back up. So double bottom. Now the classic way to trade the double bottom is to buy the stock when it trades above the middle here and put up stop loss. Now I'm going to show you a way where you can enter actually quite early. For traders, you want to enter very early as possible, because the earlier you enter, the more reward there is, the more gains there is. And secondly, I also teach you a way to find a suitable double bottom. You want a high probability double bottom. Okay, so just because a stock or index make a double bottom, you take it. No, it's not. You want to find high probability trades. So I'm going to teach you to find stocks or index that are making high probability double bottom. So okay, I call this the double bottom at rising 200 MA trading strategy. For obvious reasons, we have the double bottom and the rising 200 MA. Now here is the rising 200 MA. I color it yellow. Some of you will want to color it different colors, but that's okay. Just use a simple moving average will do. Some of you might want to use EMA, exponential moving average, but I just like to use the 200 MA, the simple MA. So the double bottom is actually a bullish reversal chart pattern. So when you see the stock or index making a double bottom, it usually tells us that, hey, the stock might want to go up. Now this is the daily chart of the Japanese Nikkei futures, Nikkei 225. You can see the index declining and then form a bottom here, move up and form a bottom here, and the index stopped dropping at the rising 200 MA. Now there is a difference between a flat 200 MA and a rising 200 MA. Here you can see the 50 MA flat. Here you can see the 200 MA rising. We do not want a flat 200 MA. We want a rising 200 MA because it tells us that is more gains in the future. A rising index is above a rising 200 MA tends to do better than when it's at a flat 200 MA, because it's pointing us to look up. You know, the index is going to go up in the long term. So what are the trade criteria? Number one, you must find a double bottom. Here we have the Nikkei having a double bottom. It must be at a rising 200 MA. Is it at the rising 200 MA? Yes, it is. And you buy the stock when it breaks above a short-term downtrend line. Later, I'll show you how to find the short-term downtrend line. You connect the highs here to as many highs in this move, and when it breaks above the downtrend line, you buy it. And number 4, you put a stop loss below the double bottom. Okay, you can put it below the entire pattern here, or you're more aggressive, just below the second bottom here. And number 5, you ride the stock higher using the 20 MA. So you just buy it, and the moment it drops below the 20 MA, you can sell half of it, raise your stop loss to your purchase price to break even and ride it higher, right? How much you want to sell is up to you. Maybe if it drops below the 20 MA again, you sell another portion, and the next time it drops below the 20 MA, here you sell a bit more, and here you sell a bit more. It's amazing how small positions can make a big difference in your trade. Okay. Now this is the 2-hour chart of Nikkei, which I zoom in. The decline here is actually the second bottom. Let me just go back to here, the previous chart. The decline is here. This is the daily chart. And when you go into the 2-hour chart, you can see the decline in more detail. What you do is connect as many highs as possible and buy the Nikkei when it trades above the downtrend line and put a stop loss. So here we also see like a triple bottom kind of pattern. So simple, you buy the breakout, put a stop loss below. Now, how do you find a very high probability double bottom? You just don't go to any double bottom. I'll teach you using the Bollinger Bands, MACD or stochastics. What you want to do is find divergences, bullish divergences. When the double bottom is about the same level, there must be divergences in the indicators. So we have this double bottom, if you remember. Now this thing here is the Bollinger Bands. I use the 20 and 2. Now notice how the first time the double bottom penetrated the Bollinger Band, but the second time it stayed within the range of the band. So this tells us there was a kind of like hidden strength in the double bottom. That's number one clue. Now the second thing is this stochastics. I just used the 1433. Notice how the double bottom here, there's a lower bottom here, a bit higher, but here we can see the stochastics improving. Stochastics low here, but making a higher low in the stochastics. So there was a bullish divergence. And the next thing is sometimes MACD might tell you there's a divergence as well. If you can see the MACD histogram here is lower, here is a bit higher, is a divergence. And MACD lines, when it gives a buy signal at the second bottom, or not exactly at, but very near, usually MACD buy signal can help propel the stock higher. So there you have it, as how to trade the double bottom, how to find a high probability trade. So I hope that this trading strategy will help you. Do try it out, paper trade it, and I hope you have learned quite a lot in this short trading strategy lesson. If you find it helpful, do like my video and subscribe to my channel for more trading strategies like this, and I'll see you in the next one.